Welcome to TradeTheNBI.com. This is John. This report is for the 27th, and well, didn't see a whole lot of action from the holiday. It was pretty modest. Everything stayed pretty much in range, and we're still near that same breakout zone. And so it kind of can be, it becomes sort of critical to see a new breakout from that and at least achieve towards this previous high. Otherwise, we might see a bit more short activity. We're already starting to see a little bit more of it on the DOC as it crosses above uh, the green in this situation, almost reaching DOC spread over the sign, and 25 pretty peak on the shakeout indicator, and that's been a strong move of shakeout gold, and that's it's just a pretty strong move of this parabolic run. And the reality is, when you have a parabolic run like this, there's got to be a retrace back into it, because anytime you exceed that 45-degree angle, there's always a reversion to the mean. And for us, that's not hard to see, positive extreme wise, where your likely retraces go back down to the 44.20 range. It's just a matter of waiting for that complete crossover. You can see from an NQ standpoint, a little bit softer with that magenta already below and now dipping below the 33 level. Still no significant change in short activity, and this is coming off a full reset of DOC steel. So you're going to have all new powder ready to go at the start of the month. So if they can survive another couple of days, the potential for another continued breakout still exists. Everyone's thinking, wow, but we're seeing this and that, and you're going to have various reports about sales and everything else from the holidays. It's less relevant than uh, nothing negative is happening, and in the absence of something negative to draw people away from the continued move, it's going to continue in that direction. It's just the momentum of things. And from a longer term scale, it's as people feel that it's gotten too far is when we start to see activation of shorts, or if they believe that we're not going to see the Fed interaction, meaning softening, because they're seeing softening economy as positive, because it means the Fed has to back down. That would result in a negative catalyst if they see improvement. So it's kind of an inverse relationship situation there. From a TLT standpoint, Treasury still right in line, perfect range. No objections with that at all. From an oil standpoint, modest. It's not too bad, not too ugly. Uh, would be better, obviously, if it were a little bit less, but uh, and that's been a boon to the euro because they're able to get much cheaper fuel costs. Relatively speaking, this move is more related to the fact that they believe that the U.S. interest rates have peaked, and people want to get into the euro early because they think that the euro is going to continue to tighten. Yeah, right. As far as interest rates go, it's not going to happen. The EU economy is already borderline, if not for numbers being fudged here and there, clearly would be recessionary throughout. From a gold standpoint, reaching back to the peaks, long overdue, and it should break out into new highs. And from a crypto space, it's just a consolidation of this previous move. Still fairly clean. We're seeing a little bit of a rejection here from a DOC, but still under the red, so it just may create some soft bouncing in between. Not seeing any real giant jump in volatility at this particular stage, barring some international events, which there really haven't been anything of note. Everything's pretty much proceeding as everyone expects. From an ETH standpoint, potential putting in cell configuration, but still cyan under red and hasn't even begun to make the move to crossover. So a little early from that standpoint. From the 50K, nothing from the holiday, and we've just smoothed off just a little bit. We had the NBI white starting to rise, but retraced, and so now magenta back over the top of it. DOC still soft from that standpoint, which is kind of why we're in a mixed blah just to begin the day. So, and everyone's going to be coming off of their big turkey event. So Friday's action for the half day wasn't a whole lot of anything either. Looking at it from an intraday chart, you can see that we're just bouncing around. It says well off the lows, so there's that potential to revisit that when we go back to holiday activity. Not a whole lot. It was, again, just muted reaction and kind of what you would expect when there's no significant play taking place as far as macro scene. So we'll just continue to keep going with the indicators. I would expect, though, that the part of December, we're probably going to get a little bit more of a definitive idea on certain directional indicators from the market via economic readings, and I think that will probably start to pick up the volatility as we get into the early days of December. Probably by the 10th or so, we'll have a pretty clear idea of things, and that will start to affect the year-end trade, and that could be a lot more dramatic than people might expect, simply because this has been such a soft November period, in that going to see some, as I always say, things are more likely to change than to stay the same. When you get a momentum in a certain way, and it's just a matter of waiting for it to end, and we can start to see it develop, and we'll see it early on our readings, particularly in the 50K. We'll give it the broadest indication. From there, it'll flip on the daily as well. So we'll just go with what we see. As always, though, trade well. Anything relevant, I'll put it on the Skype chat. Have a good one.